US dollar and R technicals. The upside run in US dollar and R continues. Stretches toward the fib extension.
Gold firms above $4,200 after weak ADP data. Focus turns to ISM Services PMI. U.S. import-export prices unexpectedly flat in September. ECB's Lagarde. Growth in economic activity should benefit from increased household spending.
United States Import Price Index, year over year, up to 0.3% in September from previous 0%.
U.S. import prices 0.0% versus 0.1% expected. Export prices 0.0% versus 0.1% expected. United States Import Price Index, MOM, came in at 0% below expectations, 0.1% in September.
United States Export Price Index, MOM, came in at 0% below forecasts, 0% in September.
Gold prices edge higher on weaker dollar ahead of Fed decision.
US dollar and R technicals. The upside run in US dollar and R continues. Stretches toward the fib extension.
Gold prices edge higher on weaker dollar ahead of Fed decision. Gold firms above $4,200 after weak ADP data. Focus turns to ISM Services PMI. U.S. import-export prices unexpectedly flat in September. ECB's Lagarde. Growth in economic activity should benefit from increased household spending.
United States Import Price Index, year over year, up to 0.3% in September from previous 0%.
U.S. import prices 0.0% versus 0.1% expected. Export prices 0.0% versus 0.1% expected. United States Import Price Index, MOM, came in at 0% below expectations, 0.1% in September.
Just about 5 minutes. Last chance to grab your coffee. Reload, reload, reload.
UK services growth eases in November.
Fed rate cut hopes dominate market sentiment. Microsoft lower AI sales quotas. Hey, sorry guys, I'm just waiting for Aiden to update the platform.
Come on, Aiden!
Get on with it!
Lagarde speech. Eurozone growth supported by household spending. Labor market. United States capacity utilization registered at 75.9%, below expectations, 77.3% in September. United States industrial production, MOM, came in at 0.1%, above forecasts 0% in September.
U.S. September industrial production 0.1% versus 0% expected.
Boy! Beast, how low can you go? Death row, what a brother know. Once again, back is the incredible rhyme animal. The incredible D, public enemy number 1. 5-0 said freeze, and I got numb. Hey, good morning. Can I tell them that I never really had a gun, but just a wax of the Terminator X spun? Yeah. It's happening. All right, let's get on with it. Forex.Today is brought to you by TRADARSway.com. So, guten Morgen. Sorry I'm late. Hey, I was trying to update the site. And, well, we finally got it. Problem is, it's so complicated. Everything takes longer and longer now. So anyway, it's good to see you. Sorry, I'm not sleeping much, so I'm not spending too much time looking pretty for you. I apologize. Huh? It's okay? No? A little bit? So anyways, hey, so we're going to do sort of an extended version today because I wasn't able to do my normal morning routine with most of y'all. So now that we're on the tube, now that
U.S. dollar, Canadian dollar declines as soft ADP report reinforces dovish Fed outlook.
Wayne, don't talk over me. So we'll do some technicals, we'll do some fundamentals, we'll do some charts. We won't do the fast and furious version. So let's go! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So what's up, Bubba? Let's get an update here.
U.S. dollar, Canadian dollar declines as soft ADP report reinforces dovish Fed outlook. U.S. September industrial production 0.1% versus 0% expected.
United States capacity utilization registered at 75.9%, below expectations. 77%.
This squawk box is free, by the way.
United States industrial production, MOM, came in at 0.1%, above forecasts 0%, in September. Lagarde speech. Eurozone growth supported by household spending, labor market.
Microsoft lower AI sales quotas. Fed rate cut hopes dominate market sentiment.
UK services growth eases in November.
Yeah, so in fact, this Microsoft lowers its AI sales quotas. That seems to have taken down some of the bullishness in the stock market right now. If you've been up for the last several hours, you probably have noticed that. So in 36 minutes, we got ISM services at 10 o'clock. I guess we can hang out and cover that. What do you think? What do you stink? Smell like a plan? ADP came out negative. Wah, 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 wah. But you know what that does? Increases the chance of save me, Jay Powell, save me. And that pushes the stock market up. So now we got sort of conflicting. Because, AI is down, but, Fed cut makes the stock market goes up. So now we got to figure all that out. Well, that's complicated, isn't it? Dual forces. Well, guess what, my friend? TRADARS is amazing. And we're very, very good at gathering this data and formulating a strategy out of it. In fact, two major things have occurred over the weekend, and it's causing some problems on simple infrastructure stuff, but as far as the complexity and the ability to handle it, I've upgraded our AI infrastructure. So imagine I bought a whole bunch of, NVIDIA chips and popped it into our AI server. Okay, I've upgraded that. So the capability of Aiden, its brain, is that much smarter. But also I updated the large language model to focus specifically on two things now. Very complicated mathematical calculations, and in particular in spatial relationships between the data. So when I studied at Oxford, I did the algorithmic trading program, and we were able to look at systems and processes of using thousands, if not millions, of data points to make an investing decision. And Aiden is now kind of built like that. So it's not kind of like ChatGPT, where it's good at making cooking recipes and creating lists for you. It's not going to be good at that at all. But again, not just mathematics.
Treasury Secretary Bessent, Trump has normalized the idea of a 15-20% tariff.
But understanding the relationships between dozens, hundreds, thousands, tens of thousands of data points, right? The relationship between them and the changing, let's say the trend of each of the 10,000 data points, and then the relationship between the 10,000 data points and the trends in those data points. And what does it mean for trading and investing? Okay, so Aiden, oh my goodness, is at another level now, right? So anyways, that's happened, but now the webinar stuff doesn't work very well. And it's so simple. So now, the simple stuff like populate our webinar tab.
U.S. dollar softens as Trump signals Hassett for Fed chair. Scotiabank.
But anyway, so I got a fix coming for that. Just thank you for your patience with me. Okay. But it's nothing but good news, right? You're going to see some amazing things come out of this. And very, very soon. By the end of the year, you are going to be blown away by our ability to take 10,000 data points, put it into a trade plan. Yeah. Yeah. Like this news radar, which helps us look at volatility and direction based on past performance. I've already asked Aiden to start rebuilding this in a similar but more interesting, more informative way. So the things that I like, Canadian IVPMI, does it move the market? Yes. what direction has it moved the market in the past based on if it was greater than or less than. And then capture that direction and build charts to show before and after. Okay. That's that. That's complicated enough, right? Because now we have millions of candles. And then we're organizing them by direction and by vol and no vol and all this kind of stuff, right? Greater than expected. But I think I can do it even better. And we've already kind of started that. So that might be on the way. We'll see. Anyways, let's move on. .com. Let's take a look at sort of our risk gauge. This is where I'm supposed to go macro, but we'll just keep it. We'll just keep going. Let's update the risk radar. Cool. And now, one of the things I've done over the last few days, I can't remember. I was up till like after midnight. Then I got up super early, and then I couldn't get the webinar going. Yeah. Oh my goodness. But, and that's a big but. Aiden's doing these calculations more often. Okay, that's something. And that takes processing power because at the very least, we're looking at these 51 variables. Okay, multiple times a day. In fact, multiple times an hour. And then doing relational calculations. It's not just what is the data point good or bad. That's an absolute number. Well, then we want to look at the trend of that. So now you want to look at what was, what is, what might be. Okay, or expected. Is expected to be. Okay, now you have to do that for 51 different things. So already now we're at 153 or something, different variables. But then you want to look at the relationships of all these moving variables and how does that impact the investing opportunities, right? Okay, so it gets very, very complicated. Now we're doing this, over 100 times a day, these calculations. It takes a lot of AI power. That's why I had to upgrade the brain and upgrade the infrastructure. Cool stuff, though, right? So what I did yesterday, I moved this up, and so I'll delete this one at the bottom. But one of the things I realized is I want to see the score. I want to see the score updating more often. I want to see, this is the aggregate general sentiment of the market. But I want to know, okay, well, how is it today versus the bigger picture? What's it been like recently relative to the bigger picture? How have things been this month? And not month, but really 30-day. This is really, 1 day, 7 day, 30 day. So it's not really monthly. Maybe right? But anyways, and then based on our weightings and a whole bunch of other things, we give it an overall score. And it was 5-something yesterday. Now it's 4-something today. So it's cooled off a little bit. And you can see that yesterday it was 5.21 and now today is 4.8. And so that's been improved a little bit. One of the things you'll notice here is, well, hey man, we went like 3 or 4 days without no change. Yeah, I was surprised by that too. And it was because something in here got its brain stuck. And what we're basically doing is too complicated for AI to handle, which is amazing, right? So that's why I upgraded the large language model and upgraded the physical architecture, the physical infrastructure, the machine, the physical machine sitting in a data warehouse somewhere is now better. Meanwhile, the brain inside the machine is also better, but not better in the way that it's focused very specifically on what we intend to do. And that is very complicated mathematics with relational analytic capabilities to say, well, all these things over here mean the stock market's going to go up, basically, right? And we're well beyond a human capability where we're looking at so many data points that you actually couldn't physically be able to do it yourself. Yeah, which is really powerful. So now you look at it and you're like, I wonder how the market feels about risk. Well, generally speaking, it's fairly positive, but right now, so far, it's cool. Okay, it's a bit of a cold start in an uptrend. Neat, right? So we're getting better and better and better at this. Okay, volatility has fallen in the last 24 hours. That's good. Nikkei has been up overnight. That's good. NASDAQ positive a little bit. Okay, that's good. But we did have this cooling off period. Okay, so I look at that and I'm like, okay, well, how is this different from that? Plus 7.9. So I like this saying that based on what's been happening the last 7 days, right now it's not red hot. It's a little negative, but we want to buy a dip in an uptrend, right? We want to look for that. Now, this in of itself is not this is not a signal because, well, we're not doing any technical analysis. So it can't be a signal. It's just a market sentiment gauge. Okay, great. So let's say this is your swing trade, bullish. This is your day trade, not so much. And then relative to that day trade, okay, it's sort of a downer. Okay, so buy a dip maybe, right? Maybe. But then you can go to your charts. Like, are you watching like Kiwi N double topped, and then drop like a ton of bricks? Okay, what does that mean? Well, there are bears. They're there. Or the bulls are wimpy. But a double top very often is a bearish sell, not a bullish sell. So we got to pay attention to that too, because this may be changing. This isn't predicting how people are going to feel next week. Technical analysis kind of is. Okay. Also, we're 1 week away from the next Fed meeting, and that's usually a take profit, fly to the Caribbean in your private jet period, isn't it? So anyways, it's what we're doing is complicated. It's totally explained down here, just so you know. And as time goes by, I will brainstorm more and more ways to make this easier to interpret. Again, the challenge here is it's doing so many calculations that a human can't actually do it. So maybe I'm not even smart enough to figure out how to report it to us simple humans in a cohesive, obvious way. I suppose the score is the most important, and that's why I moved this up. So it's okay right now, but generally it's been good this week. What do you guys think? Small improvements, right? But they all add up. Okay. One of the things I've been building First of all, we have a timestamp. So this was updated. Today's the 3rd, right? So it was just updated. All right. One of the things I'm adding here is Aiden's summary of the numbers, so that you don't really have to look at the charts. I'm trying to save you time. Your time is valuable, right? Cool. Okay, this hasn't updated yet. This just came out. This is now a negative number. But the idea is you log in, Aiden gives you a little summary, and then you get you get these quick updates. $1.42, that is the recent number. Claims, unemployment rate, that is correct. Okay, jolts, great. Some of these things haven't been updated, some things have, but this is generally correct. And like, here we go. Now we have the most recent ADP, even though the October was a dud. There's no October, you see. It's funny how this is actually November, but Aiden's reporting it as dual Octobers. That's funny. But the history is there. Obviously skewed by that. This is the prediction. Okay, so we're doing implied volatility calculations. Y equals MX plus B, this kind of stuff that I've taught you. And it is updating, which is great, and claims and all that kind of stuff. So we're making some nice progress on this page too. And then all the pages all the Econ Radar pages should have little summaries like this at the top, so you can just eyeball this quickly. But if you want to do deeper dive research, you certainly can, because we have, a lot of data. And it's all dynamic. So that's happening for you. Seasonality is super amazing now and getting better and better and better. Okay. I think one of the things you're going to like, first of all, you can do your data analytics. Ooh. Interesting. All right. Don't know why that's glitching out. Is it the way I'm clicking it? Is it where I'm clicking it? Huh. Well, his bills. That's interesting. This is still okay. Probably get it over here just fine. Okay. So there's a couple of things going on how to read this. November is usually pretty good. December is not negative, but it's less bullish. Okay. So somewhere in here, we top out, and you would assume some sort of profit taking. This is important because now you have to think about, well, when is it going to be? Is it going to be at the beginning, let's say the first half of the month, or the last half of the month? Okay. January tends to be a good month for the S&P 500. You can change the asset, of course. So you're like, well, Wayne, I don't care about the S&P 500. My favorite is gold. Wayne, what do you think about gold? All right, well, let me answer that question. This is what I think about gold. What's it doing? This one glitched out too. Okay, cool. This is what I think about gold. Yeah. And so this is not a great month. Okay, so you have November is usually good. December is usually okay. But notice in here, you go from good to okay, which could be, a downer, so to speak. And look at the cool implied volatility that we're doing in here as well. So even the implied volatility is falls. Okay, we don't have so implied volatility. Do we have it there? October volatility 5.5. November implied volatility 7.4. So we go from 5.5 to 7.75 volatility, and then December drops very significantly. Whoa! And then pops back up in January. So the range now. So it's going to get hard based on 20 years of data for gold to make significant higher highs. And then you would imply inside the implication, imply inside the imply, that there could be some profit taking somewhere in December. Okay? Now, what about negative months? Yeah, you want to find somewhere in there a buy the dip scenario. Okay? Up here, you take your profit, come back down here, and here's the other, and if you're like, Wayne, just tell me how to do this. Just tell me what to do, Wayne. Just tell me what to do. Well, first of all, I don't like that attitude. But the second thing is, sure, go ahead. Somewhere between the start of June and the end of June, somewhere in between, you buy the dip and you hold it until December. Boom. I just made you a professional trader. Oh, you don't know this stuff? Why not? What should you be doing in December? Bitcoin's actually good in December. Isn't it easy? I hope you like this, by the way that I've done this for you. Hey, Wayne, it's December. What should I look at? Well, the S&P 500 is usually mildly bullish. Bitcoin is quite good. WTI tends to come down. Dollar seems to get weak, but mildly. Well, that makes sense because this is up. Cool. What about gold? Well, this is down, so that would go up. But as you can see, it's mild. It's not huge. It's not a great opportunity. So you could do it, but then also you got to think forward a little bit and well, why is it mild? Is it, and again, maybe it's, let's say gold goes up in early December, but then comes back down and closes slightly high by the end. So now you'd want to do your technical analysis, right? And so you go to your Trader's Way, for example, and you might do something like on gold, because you still have to use your brain. Okay? Still have to use your brain. There's the response to the Microsoft news. But okay, so your brain on December. Okay, let's do it this way. Let me do monthly pivots. Template, pivot points, monthly. And let's bring it back. Okay, and now zoom in. All right. So, for example, what if December gold comes up, hits that, it's a double top, it's a target, we hit it early. Isn't that the pivot point strategy? Out of position, hit the target early, collapse. For gold. Well, isn't right? Doesn't this confirm that is what typically happens? I don't know. Now you have to infer. But do you remember when you didn't even have this data? You remember those days? How terrifying, huh? Those days you didn't even know it was all magic. Yeah, that doesn't sound good to me. All right. So, anyways, cool stuff, right? It's getting better and better and better. So, here's your monthly analysis. It's important to me that you have full transparency. So, again, as a subscriber, you can get that whenever you want. Cool. So, you guys want to do a little vote here? Not that vote. Boom, 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 boom. Do you want to pick one of these to focus on today? Instead of me doing one of each? You want to look at Forex only, crypto only, commodities only, indices only, stocks? What do you want to do today? Type in the chat. Let me know you're alive. I mean, I think I skipped the implied volatility review. We should probably do that. That might be a good way to look at all this stuff. But tell me what's on your mind. You're pretty quiet this morning. Or maybe just my chat doesn't update, which is entirely important. Oh, there we go. Maybe there's a massive delay, right? Gold, everybody loves gold. Yeah. Well, that's very easy to do, right? This is what I think about gold. Consolidation, maybe a breakout. Get ready here. The up, the down, the pullback. See, let me zoom in. All I want to do is a zoom, zoom, zoom in, a boom, boom. Okay? This should be your heads up. If you're a bull, this might be your play. Whoop. Right? Isn't that what you've been looking for? Isn't that how you trade a triangle? Breakout, pullback, long and gone? So what you would do, okay, is you would imply, let me get the color correct, that this continues looking something like this. And now we go from consolidation pattern. So TRADARS would drop the triangle and then pop in a form of the channel. Now, it might be a channel, could be a wedge. Maybe we draw it this way, But whatever, up is up. You got it? Tell me it's beautiful. So now you can go to okay, maybe a breakout on the 30-minute chart. Oh, really? Okay. Well, if this is your strategy for the month of December, do you even have one for gold? See, here's the thing. This is why we have all this data. You should generally know what you think gold is going to do for the entire month of December and even January. So here's what I think. Something like that. I'm combining technical, fundamentals, seasonal, sentiment. I'm combining everything. As much as my human brain can do it, but I also have Aiden doing all the stuff that my human brain can't do. Okay, great. So maybe something like that. That's called strategy. Now, tactics we have to pay attention to the technical variables. What are they? Okay, this is the one place a bear would sell. So bears are going to think this or up here, right? Oh, great. Now I know what bears are going to do, even though I'm not a bear. I'm a bull. Well, if you don't know what the bears are going to do, how are you supposed to like win the battle? Okay. So I know that. I know that. Because if you know how to trade, if I said, hey, be a bear, show me the setups. Well, if it reverses here, take the sell. There's the target. If it reverses there, take the sell. There's the target. That's just grade 1 Crayola crayon level of technical analysis. Great. So I know where my threats are now. Okay. As a bull, okay, these are the 2 buy zones today. And this is the rest of the week. Cool. Great. So now we go to the 30-minute because we have that on our radar. Ooh. Okay. Is this okay? Now let me draw it. Now that the orange line is our long-term channel, right? And then we had something like this on our radar. Am I right? Okay, so now there's only 2 things that are likely happening. 1, the Microsoft news is so bad, the stock market is crashing, the dollar's going to get strong, and it's going to destroy all the risk on sentiment. That is possible. But maybe that reinforces the Fed's going to cut. Okay, whatever. Or you're a bull and you wait your damn turn. If you're a bull, that's not bullish, is it? Okay, but maybe here somewhere. And we are trying to do this today, working our way up to your December monthly target, which you believe is going to happen in the first half of the month, which is just over a week from now. So if you're a bull, is that bullish? You're pretty close to a price. See, now you have the price, but you don't have the time. When is it going to hit this? But the price should be obvious. Okay? It's hard to plan your trades if you don't even know what price to buy or sell. So, this is our plan tactically. And we saw this on our pattern recognition tool. Okay. And on the 60-minute, it says, you know what, Wayne? This is a bigger range. Oh, that maybe it comes all the way back down to what, 4,100 and then up? All right, well, put that into the news. Is the Microsoft news really that important? Is it or not? Have things really changed or not? Or is this your opportunity to try a setup or not? All right, so now we know where the prices are. Let me try to draw it maybe this way. Draw it upside down, maybe? There it is. Okay. We're going to try to do the blue line. Let me get rid of the strategy. The strategy line is the orange one. I don't think it'll let me. It's on a different time frame. Okay. It's not going to easily let me do that. All right. So I just want you to focus on the blue, which is the now. We're trying to line up tactics with strategy. Strategy is set. The entire month of December has already been planned out by me. but not on my guessing, on all the data that TRADARS provides. Great. So now you go into a Fiverr. Okay, you want to buy close to the blue line, somewhere around the blue line. It doesn't have to be precisely a blue line because it's subjective. Aha! This is the whole idea of being ready, willing, and able to take the shot. Okay, that's that. Is there another way we can do this that is more technical analysis and less pattern recognition? These are just patterns. Okay, well, let's say you have conviction because of the patterns. You have conviction because of the fundamentals. You have conviction because of seasonality. You know, modest up, but probably up the first half, down the second half. Okay, fine. Let's clean our slate. Let's go tactical. On a 5-minute chart, show me the day trade bullish buys. Cool. We're right next to the buy zone. You already missed it, by the way. So if you had done this yesterday, you'd already be in now at the London Open. Your stop would be jammed at break even, and you wouldn't give two hoots about what's happening now because you already made your day trade. You should not be logging into the New York session to do your day trade. This is what you were supposed to be doing yesterday. Okay? Yesterday. Cool. So another way of looking at it is, what if you were planning tomorrow? What's the easiest way? Well, I've already plotted this on my charts. That is the buy zone for tomorrow. So Thursday's trade is this one. That's closer to the reality that you should be setting up. But if you're still today, oh my God, really? See, like, here's a day, but you should be trading it here. Okay, not here. That's the New York Open. This is probably the New York close. Yeah, baby. Anyways, Papa, don't preach. I'm in trouble deep. But I made up my mind. I'm keeping my carries. I'm gonna keep my carry trades. Ooh, oh. Yeah. You guys loving it? Like a Royale with cheese? Boop, 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 boop. That's interesting. It's already been updated. It looks like. Yeah, there's the update. Oh, that's new. Okay, so here's what's new. It's the new version, and it still doesn't work on the live server. Ha! I've been working nonstop on this, and it's supposed to work now. At least a basic version. And so I'm happy to see the change, but it's so strange. We are breaking the server with Aiden, the AI server in the data center with upgraded infrastructure, improved brain, and then I've redeveloped everything from scratch yesterday to be more efficient in the back-end design. Oh, see, I'm getting tired now, and now it still doesn't work. Oh my God. Anyways, that's interesting. Didn't expect that, but I'm not shocked. Okay. What I wanted to do is go here. So let's have some fun. I'm going to turn everything up. Tell me what assets you want me to cover. We've already done gold. Crypto's too generic, although I could do more crypto. Okay, Bitcoin for sure. What else would you like me to cover? It's tricky. So I click Bitcoin, but then I click that. Oh, it's just tweet. Okay, cool. Tell me what you want me to cover today, and I'll cover it. You're the boss. Allow me to serve you. Allow me to serve you. I'm a servant leader. Let me know how I can help. Oh, and I'll deliver the goods. Do you deliver? Every day. Up until recently. Let me know how I can help. Come on, laggy YouTube. YouTube is such a laggard. I'll just sit here and sip my coffee while we wait for YouTube. I'm keeping my carry. I'm gonna keep my carry trades. Ooh, oh. Wow. Hello. Maybe if I run an ad, it'll wake up YouTube. Let's try that. I'm keeping my baby. No kidding. No response. What? Checking my stream health. It says excellent. Yeah, there is and there isn't. I'm working on it. So these things. So I've been to the CFTC website today. Let's do this. I've been to the CFTC website. I've checked out the release schedule. I've read the reports. I've updated Aiden. It's just very difficult for databases to have a broken structure. Meaning, usually November comes out, December comes out, January comes out, February comes out, March, April, May, June, July, August, and now they're coming out like all over the place. And it's a bit of a data mess. And you can't really program it to say, hey, everything's going to come out at random times, right? Yeah, and I did see that. And Aiden knows this now. So so I've already so you're on the right track. So it's challenging for TRADARS, although we're working on it. Like I said, like literally this morning I was doing stuff like that. But as far as how to use it for analytics, it's a little tricky until we get caught up. So it's just going to be a throwaway December and maybe even a January, as you say. But by January, we're pretty much caught up, even though it's choppy releases, right? Yeah. Okay. John wants Ethereum. Come on, guys, tell me, what do you want me to focus on? I'm only going to do what you guys asked me to do. Again. Bitcoin, Ethereum. This is really sensitive. I'm going to review it. Commodity, crypto, Forex, indices, stocks. You want individual stocks? You want to look at Microsoft? Or as some people say on TV, and it drives me nuts, they say Microsoft. I'm like, Microsoft? What the heck is Microsoft? Oh, Microsoft. Yeah. So anyways, tell me what you want to do. I'm going to throw in my Microsoft. Oh, dang it, son of a... That is a sensitive little toggle. Again. If I do it this way, save, and then it's going to go back up. Okay, what else do you guys want? Really? That's it? Are people not here? Are you shy? What do you want me to cover? Oh, okay. Now, thank you for sharing that about the idea of screwing up trading lately. That can definitely happen. It happens to everybody. Going to one currency pair, I don't think is the right thing to do. You need to focus on the dollar and then do relative strength. Because you can try to do good strategic trading on euro dollar, but if it's a dog, or even worse, a dog with fleas, then how are you supposed to improve if you're trading the wrong instrument? Right? So you would go to go to the volatility tool and turn on dollar pairs. Okay? That's that. And don't focus only on technical analysis. So ask yourself, what is happening in the world fundamentally, technically, geopolitically, sentimentally? What's going on with the dollar? What's influencing the dollar? What could be going on? Peace in Ukraine? Peace with China on trade wars? Why are the liberals freaking out that we're killing drug dealers in Colombia? Who cares? Maybe that moves the dollar. Is it AI bubble fears? Is it the Fed going to cut interest rates? Is it, just start thinking about all these things and try to go through the data and try to put it all together. And you're trying to figure out one thing and one thing only. Dollar up or dollar down? It's the only thing you have to get right. That's the strategy. Then you go confirm it with technicals on the longer term. So up for the next 2 weeks? Maybe. Great. So then the rest of your day is every day is tactical. Is today the day to sell the Mexican peso? Is today the day, or in this case buy, but USD peso? Is today the day to sell USD peso? Is today the day to sell USD CAD? Well, why CAD? Why CAD strength today? If you're correct on dollar weakness, well, why CAD today? Why buy Kiwi dollar today? Yeah, investorbootcamp.com is $88 a year. Yeah. I'll put this in here. Yeah. I'm going to get rich and buy a Lamborghini, by the way, with all the money I'm making from my training course. Yeah. Yeah. I'm going to get rich. All right. So anyway, so this is what you're thinking about here, where if you decided you want to be a bear on the dollar, you're a bear on the dollar. Give yourself a time frame. Is it all month? No, probably not, because the month doesn't start on the 1st and end on the 30th. There's a peak and a valley. There's always a peak and a valley. So now you're trying to figure out where's the peak, where's the valley. This is where seasonality helps. So you're going to have this, right? So anyway, so you get to your strategic conclusion. The next couple of weeks, at least, we're going to sell the dollar. Done. Is it right? Well, if you're right, you're going to get a lot of setups, right, Denise? If you're wrong, you're not going to get a lot of setups. Well, it's better than losing consistently, right? At least you will consistently not get trade setups. Okay? At least you stop the bleeding. So remember, consistency creates control. Control creates confidence. And this is what we're trying to do. The worst thing in the world is look for trades. Shoot, there's always a trade. The trigger doesn't care if you go up or down, long or short. The broker doesn't care if you're long or short. But you should care, right? Yeah. Yeah. Yeah, that is the assumption. Yeah. Oh, Tesla. I'll do Tesla for you. Tesla. Bum, 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 bum. Tesla. 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 Okay. So anyway, so what's the control? You're going to sell the dollar. Done. Okay. So you're consistently going to sell the dollar or not sell the dollar. There's your control and there's your consistency. If you can't do that, then you have your troubles are emotional. Trust me, that can happen. Great. So you've made the decision, right? You made your bed. Now you got to lay it. Done. Just make sure that decision is made wisely. An honorable general is victorious because many decisions were made. Okay? Yeah. All right. So anyways. So now, Denise, you spend your day not doing strategy because your strategy is already set. Now you do your day doing relative strength. And I'll give you an example of that, everybody. So you go to your tradersway.com platform and you fire up. There's multiple ways of doing it. You can do the calculations manually, and you should be able to look at this and say, is pound going up or down? It's going up on the short term, down on the long term. Cool. You can use this, which is another way to automate it. Or you do this way, which is long term. Or you do this way, which is short term. But I think we want short term because you're already long term short USD. So now you're looking for, what are you short-term long today? Is it euro? Well, if euro looked like that, that wouldn't be great. Dollar is strong right now. Are you confident in your sell position, your selling idea? Not yet, but you should still be doing your technical analysis to say, okay, it might be going up now, but maybe later today or at the end of the day or tomorrow it will fall. Is it falling now? No. But who cares? You're a bear. It's going up. It's setting up for your trade later today or tomorrow. But if you chase price, okay, you're like an animal chasing its tail. The view never changes, and it stinks all the time. Okay, so you're like, okay, well, maybe now's not the time to be selling dollar, but maybe later. Cool. Set up the trade plan. Where's the resistance? What do our technical radars show? Downtrends or uptrends? On short time frames, this would be an uptrend. And a long time frame, this is a downtrend. So line up your time frames. We have all the tools to do this for you. The thing is, you have to know how to trade like I'm teaching you, right? I'm not just speaking to Denise. I'm talking to everybody. So is this a good time to buy euro? Does it look strong to you? No. How about the pig? Oh, so maybe later today you get a pound dollar trade. What about Kiwi dollar? That's a maybe. What about dollar Swissy? Well, you're trying to sell the dollar and buy something strong, but Swissy's not strong in the short run. So not now. What about Aussie? Well, it was down, hit the roll reversal, and it's turning up. Now you're like, Wayne, this doesn't look like my chart. This is an index I've created. Shut up. This is Aussie versus everything. Wayne, you're like, Wayne, that's cheating. You shouldn't have data like that. Well, I do. Cool. So if this is now bouncing up, as soon as this rolls over, your Aussie dollar goes up. Okay, this has moved up off of this now. Is this bullish? No, but it's a bounce off the bearish. This is more bullish than that. So I'd go Aussie first, Kiwi next. How do you feel about pound? Well, that looks like a rocket ship. So maybe pound before Aussie, Aussie before Kiwi. Definitely not. Definitely not. Definitely not. And I don't want to do that. So there you go. I just 3 trades to look at for today. 3 big, fat maybes. Aussie and pound and Kiwi. All right? So you could do that. Let's look at Aussie pound Kiwi. Okay? Kiwi. Cool. We want this to go up. This is the buy zone right now. Not based on pivot points, based on implied volatility. Cool. So what's it going to do now? Well, what are you going to do now? Is that your day trade? Well, get in on it. Get going. Is that what you're going to do or not? Okay. This is why having a strategy is important. It's not the technique to enter your trade. That's not a strategy. Are you a bull or a bear? And can you prove it to me? Why are you a bull or a bear? Cool. So, boom, boom, boom. There's your day trade. Okay. Kiwi, Aussie. Okay. Good. This one, riding the moving average, right? Ride the moving average, kick off the implied low. So go to the hourly chart and look for and do technical analysis. You want red candles so you can buy it. Cool. Is it going to work out? Well, we don't know that. But if you're right on your strategy, then this technique, the tactic, I mean, at some point, you don't care which door you kick down, as long as you're pretty sure there's bad guys in there, right? And what else did we do? We looked at, what did we say? Aussie, Kiwi. and pound, wasn't it? I don't see a pig here. So let me open that up. I missed my pig. And there's my pig. Cool. Where's my great big pig? Great big pig. And as we saw doing a relative strength exercise, this is the best winner. Winner, winner, chicken dinner. And we had a down day here. Then it turned up, and we've been riding the moving averages ever since. Cool. So, having done relative strength exercises, you would have been better off trading this today than the stupid euro dollar. Okay? So do not, put it this way. Hey, Denise, I wrote an entire chapter in my book about why you should never just trade one currency pair. Like, let's put it that way. It's right? The greenback guru. Everybody remembers that one, right? So anyways, confidence is difficult. And this is why I'm hitting you hard in this particular case, because I have so much respect for you. And so it's more like, let's remember remember the rules of engagement. So now we have all these tools, but if you use them as signals, it ain't going to work. So now you have to be like, you have all this data and analysis, but ultimately you still have to be a trader. The second thing I would recommend before I move on is that you should be doing a business planning retreat for yourself and your trading business. Schedule at least a full day of isolation. You got to get out of your house, your home office, your trading room. You got to get away from your friends and the family. You need to isolate yourself like a monk, right? Like Dr. Dre down in the lab with his pen and his pad. And plan 2026. But not just what you're going to do, how you're going to behave. Well, you don't need to go back and read the chapter. Okay, what I just shared is enough. But the thing is, you got to focus on being a good trader, not just... See, what happens is, I think a lot of us just slide into making trades and counting whether they're profitable or not. That's not good. So let's say you're a talented basketball player, and you show up every game ready to play your darndest. Other players show up and they've reviewed the tapes, they've reviewed the statistics, they've reviewed the other players, they have a visual of how they're going to behave and how they're going to guard and how they're going to do their offense, and they know the weakness of the person guarding them, so now they have a strategy for that. They visualize their shots. There's a big difference between a franchise player and then a good basketball player. And sometimes we got to get back to the focus. Yeah. So you're a good trader. Sometimes you have winning games, sometimes you have losing games. Well, you know what? That's unacceptable. Yeah. You're not here to play basketball. You're here to win the tournament. You're here to win the championship. I mean, there was literally, I can't even remember who it was or what sport it was, but because I don't watch TV that often, but I was watching something on TV, some professional player said something like, I don't know, but basically, like, the goal is to, play the game every day. I'm like, no, it's not. It's not the goal. The goal isn't to show up. Remember, they would say 80% of it is showing up. No, it's not. 80% of success is not sucking. Showing up, you can still suck. So I hate that, right? So it's more like, why don't you show up? And again, I'm not specifically talking to you, Denise. I'm talking to myself. I'm talking to all of us. But the idea here, and it's the idea, that's my message, is that the idea is not just showing up. The idea is doing 110% at all times to win the championship and get into the Hall of Fame. That's why you got hired by the team. Not to show up and play random basketball every day or whatever the sport is, right? So, when you look at these franchise players that are at a whole different level than the average player, they have coaches and dietitians, and I remember that Michael Jordan had a coach about halfway through his career. He hired basically a dietitian, right? And Michael Jordan's like, I need more energy. I need to be able to complete my games, and I need to eat better. You need to do whatever. And he did diet and basically like stretching and stuff, right? Okay, great. So that's all Michael Jordan wanted. So he figured, okay, you're going to eat eggs and avocado, blah, blah, blah. Didn't think much of it. Well, the guy, after a week or two, said, okay, Michael, I watched your game this evening. I guess sent him a text after the game that was just happened. So Michael Jordan's like, oh my God, really? And the dietitian said, I counted how many shots you made and how many of those shots were made jumping off your left leg or jumping off your right leg. And so tomorrow, when you get back to the practice facility or your home, I will be there. And because you made 42% more shots with your right leg, I'm going to work on your left and your right legs to make sure that they are in peak performance for the next game. Michael Jordan's like, holy smokes. I didn't ask you to do that, but that's astounding. Tell me more. And so both of them have that A-game attitude. Like, how can I be the guy that's supposed to stretch you and tell you how to eat properly, to align your spine? Like 99.9% of coaches like that would simply just say, okay, come in, we'll give you a massage, we'll stretch out your leg because it hurts. Meanwhile, this guy says, I know why you have pain here, here, and here. It's because what you are doing on the floor, and by the way, I watched myself, I did all the calculations myself, and I'm reporting to you, and I'm telling you why you're weak on this side in the fourth quarter. because you have pain here and it's going to your stomach, it's going to your lower back, you're getting a little less lift. People are able to block you. You're a little slow moving this way, so you tend to want to move that way, and you're not performing at peak. So let's change everything. And all of a sudden, you got a game player with an A game coach, and nobody asked for this. The team didn't say, go to that level, Michael Jordan. But they said, we want you to win championships, or at least it's implied. And the coach was never told, count how many steps and how many shots, and how do I perform in each quarter, and how can I do better in the fourth quarter. You see what I mean? And all of a sudden, oh my God, if you had the data, it's a whole different level. And that's where we need to get back. It's not about how many trades you make, how many shots you take. It's like, is that your focus? Are you changing your diet? Are you to be a better trader? Are you changing your sleep habits to be a better trader? Are you changing your processes to be a better trader? Are you tracking your statistics to be a better trader? Are you more patient and more disciplined to be a better trader? What are you doing right now to be a better trader? And then do what I did. And again, this is in my book from 100 years ago. I didn't have a mentor. I didn't have a guru. There was no YouTube yet. There was no Amazon.com yet. There was just nothing. And I still remember thinking, okay, I need a mentor to help me. But I don't know any Forex trader. I knew some professional investors at that time, and they laughed at me for doing Forex, and they laughed at me for doing technical analysis. And I'm not even joking, like to my face. And I call them friends. But, you know, they had a couple $100 million, or actually quite a bit more than that. And they were traders and investors. Okay, fine. So I'm like, they're not helpful. So where do I get a mentor? And I went through a process because at that time I just quit being a VC and a high-tech entrepreneur. So I was very used to like business plans and hiring people and all this kind of stuff. I mean, I've hired hundreds and hundreds and hundreds of people. Okay. So I was thinking that way at the time. All right. If I were going to hire a coach, what kind of characteristics would this coach have if I was going to hire the coach? Patience, discipline, you know, all this kind of stuff, right? Yeah. And here we are. It's still the most important thing. But now the data. All right. So anyways, so that's how you go. Euro dollar, okay for buying a dip. Pound dollar, probably better. Okay. Are you going to sell the rip? Okay. Great. Aussie. Look, came down, hit the moving average, hit the 1 hour implied, and now we're hot to go HOTTOGO. That's how you trade, everybody. Now, this used to take me hours to get to just the point of wanting to trade Aussie dollar. This should now take you minutes. I used to do it via Excel spreadsheet. Yeah. Anyways, you know, but that was 25 years ago. I got better. Okay, let's do our Microsoft. Look at the gap down. Now, I told you this had to do with them missing. Well, actually, they said earlier today that there was a slowdown in orders for their AI product. Okay, great. So that's terrible, right? Not if you're a bull. Because if you're a bull, you want to buy dips. You're like, okay, well, this is a short-term hiccup for Microsoft. You think Microsoft is going to do this in the long run. Well, do you have a long-run view? Then if you're a long-term bull, let's say the next 2, 3, 4, 5 years, well, this dip might be your opportunity. Has it made a lower low on the hourly? No, but it dipped. So you can say, oh, maybe I'm interested in buying Microsoft. I'm not saying you should. You should know why you want to own Microsoft. So like I manage endowments for charities, right? I have to know what to put into the portfolio and why to put it in the portfolio. And it's not just because it makes money or I think it's going to go up. Okay, I make better decisions than that. Okay, so if you made a decision to own it, cool. Well, that dip might be an opportunity for you. What does Tesla look like? Somebody asked about Tesla. Hottogo, HOTTOGO. Okay, and it's moving on the open. Cool. We know from this that the best hour of the day has just passed. So the best time to trade Tesla was a couple hours ago. Oh, which means you could have caught maybe the daily implied low and taken it up, maybe. But tomorrow, if this continues, tomorrow meaning not tomorrow midnight, but 24 hours from now, we could be up here on Tesla. Bitcoin. Okay, we were at 93. Looks like we've been struggling the last few hours. We are in the implied low, so if this roll reversal is going to hold, oops. Okay, we want to see this support hold, and if it does, then 24 hours from now, we will be testing 95. If it doesn't hold, God help us all. Well, the training courses at Investor Bootcamp is like 100 hours. Yeah. Not bad for $88. Yeah. But many people here have gone through a much more disciplined live coaching experience. And one of the tests that we had was to trade 100, no, it's more than 100 trades, but trade and make 10,000 pips. And I think even one requirement was without taking a loss. Yeah. Again, 10,000 pips in 1 month without taking a loss, I think was the minimum exam using the trade simulator. So you've studied VPA, market structure, and stuff like that. Okay. Let me tell you, I mean, that's good. But remind yourself that's not a strategy. That's a tactic. Okay. There are three things that can occur in the market: uptrend, downtrend, sideways trend, right? Cool. So the first thing is to know that it's happening. Which one? The second thing is to know when it usually happens. This is a big part that amateur traders miss. So you're like, I know VBA market structure, but you don't know when this usually goes up or when this usually goes down or when the asset usually moves sideways. So by the time you've done your VPA market structure analysis, you've already lost your money or you've already missed the change in direction. And so you made money for a while, but then you didn't know it was going to reverse, and then you gave it back. And at the end of the year, you're very good at VPA and market structure, but you've given back 70% of your profits because you couldn't see into the future. Oh, well, that's why we track fundamentals. This is why we track monetary policy. This is why we track seasonality, so that you can do the right thing now, but be prepared for what is probably going to happen soon, or at least you're hyper aware of the probability of a change in market structure. Okay, great. So up, down, or sideways, or is it likely to change? So if it's up, you buy a dip. So you can do all kinds of analysis to simply buy a dip. And I couldn't care less which one you use. I couldn't care less. Buy a dip, bro. It's an uptrend. Buy a dip. Oh, but it's been falling for 3 days. Yeah, we call that a dip. Oh, but now I'm a bear because it's been falling for 3 days. That's not trading. All right. So you buy a dip. Could you use Fibonacci for this? Yep. Could you use Elliott Wave for this? Yep. Could you use moving averages for this? Yep. Could you use pivot points for this? Yep. Could you use price action for this? Yep. It's all the same thing. Where traders go wrong is they are looking for a system to tell them what to do. And they can't see the obvious of, dude, it's an uptrend. What's the problem? You know, like, what's the problem? I don't know, it's an uptrend. Well, there's your failure. Do you know what I'm talking about? You don't know if you're a bull or a bear? That's your failure. You don't know what you're doing. How could you possibly have consistent results if you never know what you're doing? Oh, it's all in the price. No, it's not. It's not. When somebody tells you that, it's because they don't understand. So if you have another YouTube guru that's 10 times more exciting than me because they're placing trades on their chart, great. Go ahead and follow them. That's what you want. You'll never be a boss. Okay? You're not a decision maker. You're inherently a follower. Okay, great. All right. But if you have the data and you are willing to do the work to make a simple decision of, are you a bull or a bear? I don't think I'm asking for too much, especially with these tools that do 90% of the work for you anyways. So you're like, well, Wayne, I'm a bull. So when talking with Denise, what did we say? Okay. I said, let's say you went through all this data and then the net output is some things are bullish, some things are bearish when you look at the dollar. But what's the net? Bullish minus bearish. Okay? Great. So you analyze that and you come to some sort of conclusion, and I don't even care if it's the right conclusion. It's just that you made a conclusion. You know where you stand. And you say, well, for the next 2 to 4 weeks, you're a dollar bear. Cool. So now you're just analyzing this. So let's then let's give that example of, okay, dollar versus euro. Is it doing this, this, or this? That's your only question. If it's sideways, maybe buy a dip here. If it's down, don't do anything. If it's up, you definitely want to buy something like that. And then you do it again. With pound. You want to sell this, so you want up. So if it's a downtrend, do nothing. If it's a sideways trend, maybe here, but look for a higher high, higher low, and definitely there. And if it is making higher highs, buy the higher low. And if it makes a lower low, stop. What's the problem? You want to look to do more. Don't look for cheats. Don't look for shortcuts. Don't follow some knucklehead on YouTube that has never passed government regulation, doesn't have a degree in macroeconomics, because they're going to say economics don't matter, it's all in the price. Well, what are they really saying? They don't have an education. They don't know how to understand macroeconomics. They may not even understand how to be a professional trader. They don't understand hedge funds. Okay? I went to Oxford specifically to look at how to use algorithmic trading, not just to make trades, but to analyze the result of algorithmic trades. My final exam was review these two histories, trading histories, and tell us whether we should invest or not and why. That's a heck of an education. I went to MIT and studied with Gary Gensler, specifically cryptocurrency. Who? The guy that regulates cryptocurrencies? Can't remember him? Okay? So you kind of want, right? You kind of want some like street cred. Okay, great. And then you got to focus on how to use the data, because I want you to be the boss. I want you to be the boss. You don't log in to listen to Wayne. Maybe you log in to listen to Wayne's speeches, but then you get fired up and you're like, holy schnicker-schnocker. I'm going to up my game and I'm going to look to do things better, and I'm looked to do more. What more can I do to be a successful trader? Versus, hey, Wayne, what do you think about gold? Should I buy it? Dude, really? What do I think about gold? Well, if that's what you want, why don't you just go to commodities? Turn everything else off. Find yourself some gold. What do I think about gold? That's what's happening right now. Okay, now go to the next level. Are you a bull or a bear? Go to the next level. What is the market? Is the market bullish or bearish? Is this trending up, down, or sideways? Does this look like a good opportunity? Which one are you looking at? So this is an hourly chart. Oops. So open up your big chart, open up your Trader's Way MT4 and say, well, is gold doing this on the long run? I don't know. Are you a bull or a bear? Is it doing this on the long run? I don't know. Are you a bull or a bear? Is this a 3-wave correction? And now what do you think about this? Is this the future? I don't know. Are you thinking like this? Well, if it's doing this, you buy the dip. What do you think about gold? Well, why do you buy gold? Wayne, I think you buy gold because of inflation. All right, well, let's look at 15 years of inflation. Okay. Wayne, sometimes you buy gold because of aggregate demand. Okay, well, let's define aggregate demand. Okay. What do I think about gold? Well, that's also easy over here. Again, now I'm like, if I made the decision, I'm a boss, by the way. Okay. I want to own gold. Right. And maybe this is partially because I've already made a decision I want to sell the dollar. Gold is priced in dollar. If dollar falls, gold goes up. Even if demand doesn't increase, the purchasing power of a dollar decreases, making the price of gold higher only in dollars. So now I got a double whammy going for me. Sweet. So I've made a decision because I'm a boss. I'm not just a male model, but I'm a boss. Cool. I looked at price action. Maybe I found that to be a long-term uptrend, a 3-wave correction, and now I'm going to assume an upward trajectory for gold. So now I'm very hyper interested today. By the way, this is all just scenario based. I'm not saying this is my opinion. I'm not going to tell you what to do. Yeah. Okay, great. So how do we interpret this? Okay, I want to buy. What about now? Is now a time to buy? Is now a time to buy? Yeah, maybe. Okay. Are you watching this? The pattern is C to D, D to E, E to F, F to G, G to H. Do you even have that on your radar? It's on my radar. See? I'm having a machine watch 5 time frames looking for 20 different reliable, repeatable patterns. And I watch it 24 hours a day and I never make a mistake. Well, actually, Aiden is doing. You can't do it 24 hours a day. You can't watch 5 time frames at the same time and be able to look for all these patterns without fail. And in fact, they're not even patterns that have formed. They're patterns that might be forming. They're predictive. Not predictive, but informative. So if you're a bull, oh my God, this might be awesome, bro. Put it on the maybe list. Go pull up your gold on a 15. What about here? Well, we've already talked about it and I already drew this. Remember, I went to the charts and said, well, if you're a bull, that's a buying opportunity. We only did that like a half an hour ago, right? So let's take a look. What's happened in that time? Oh my God, it's rallied up. Of course it's rallied up. Are you a bull or not? Well, I didn't want to buy it because it was fun. Dude, make a decision. Be a boss. Are you buying the dip or not? Cool. Well, if you don't have conviction because you don't have the data, then you're just a degenerate gambler. So maybe you don't have the conviction because you don't have the data. Remember, I started with gold saying November is a hot month. And I'm thinking, based on my seasonal analysis of the last 20 years for gold, it's moderately up in December, but I'm going to skew it to up in the first half, down in the second half. I get all of this from data. So now, guess what? I have conviction to do, right? I have conviction to get out of bed and do what needs to get done. And then I go on vacation and I am happy as can be. And I'm not worried about gold because I already played the probabilities. I don't play the what ifs and maybes and could be's. I play the odds. Cool. So what about hourly? They all kind of look the same. What about the 4 hour? Yeah, I have some concern. So if these all fail, so if this ABCD emerging fails and we get to B and then drop, all bets are up for today. So I jam my stop and I move on.com. Oh my God. Oh my God. So check this out. If you really want to see what's coming next, go to traders.com and play this video. And then this has been built. It's already been built. We are launching it. Watch this video, and then if you follow the vision and this is happening, guys. This isn't real. This is real. This is not artificial. This isn't maybe. This is not in a year or two. This is in a day or two. And it's part of the free subscription to TRADARS. And if you go through the site, I tell you many, 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 many times, the free version of the site is worth a lot of money. I am 1,000% convinced you can go pay somebody else $200, $300, $400 a month and not even get something comparable to our free service. And then it's a freemium model, so you can upgrade from there. We have premium plans, but you don't need it. I want you to just have this, dude. I want you to rock and roll. And even then, the premium plans are not expensive. And hopefully that works. That's a big hope. That's funny because that won't work. I just realized what it did. That won't work. That won't work. Watch this, though. There's a different version down here somewhere. This will work. It's so funny. Aiden missed something. Because to get to that page I just showed you, it has to pass the email. And so this won't work if you click that button I just showed you, because then you'll go to sign up and then it'll say, you're supposed to give me your email. So anyways, this will work. Start for free works. Yeah. Good. Anyways, peace on earth. May the boost be with you. May your profits be above average. If Brian's out, I'm out.